All right, let's finish up by looking at exercise 12.1 in the handout. This gives us a list of items that could be included in the intangible assets section of the balance sheet. So let's go through these and just pinpoint which ones would be considered intangible assets and included in that section of the balance sheet. And then while we're at it, we'll look at the other ones that wouldn't be considered intangible assets and think about how they would be classified in the balance sheet. Start with number one, investment in a subsidiary company. That is a long-term investment, not an intangible asset. 3, cost of engineering activity required to advance the design of a product to the manufacturing stage. Advance the design of a product. That's an R&D expense. Income statement. 4, a lease payment. 6 months were paid in advance. This is a prepaid asset, right? Where would this go in the classified balance sheet? Current assets. How about the cost of equipment that a company buys? Property, plant, and equipment in the balance sheet. Cost of searching for applications of new research findings. Well, that's research and development, an expense in the income statement. Cost incurred in the formation of a corporation. This is number 7. This is an expense. Operating losses incurred in the startup of a business. Another expense. Training costs incurred in the startup of a new operation. Expense. All right, here we go. Number 10. Purchase cost of a franchise. That's an intangible asset. 11. Goodwill generated internally. We only record goodwill when we acquire a new business and the acquisition price exceeds the net asset value of the identifiable assets. So this internally generated goodwill doesn't have any journal entry. It is not recorded. 12. Cost of testing in search for product alternatives. That's R&D, and that's an expense on the income statement. 13. Goodwill acquired in the purchase of a business. Here we go. That's goodwill. It's recorded as an intangible asset. How about 14? The cost of developing a patent. That sounds like internal development. That's an R&D expense in the income statement. 15. Cost of purchasing a patent from an inventor. A direct cost, verifiable. We will capitalize this as patent and intangible asset. Legal costs, this is number 16. Legal costs incurred in securing a patent. Capitalize as an intangible asset. Unrecovered costs of a successful legal suit to protect a patent. So we were successful in this defense. We'll capitalize it as an intangible asset called patent. 18. Cost of conceptual formulation of possible product alternatives. That's research and development and expense. 19. Cost of purchasing a copyright. Capitalization, a direct cost of copyright and intangible asset on the balance sheet. 20. Research and development costs, expense. 21. Long-term receivables, a long-term investment on the balance sheet, not an intangible asset. 22. Cost of developing a trademark. Well, that sounds internal, and that's an expense. And 23. Cost of purchasing a trademark. We can capitalize that as patent, as an intangible asset. So for E12.1, the intangible assets included among this list are Purchase of a franchise, goodwill acquired in a business, cost of purchasing a patent, legal cost incurred in securing a patent, unrecovered cost of successfully defending a patent, cost of purchasing a copyright, and cost of purchasing a trademark.